Yet another day of gains when we lost 3 million jobs. What's with this market? We're losing a ton of jobs. Economic damage is certain. There's no buybacks. Why is the market rallying so hard? It's interesting. Monday, we had every reason to sell off. Warren Buffett came out, was very negative. The airlines sold off. Rising tensions between the United States and China. There were a lot of reasons to sell off on Monday. We didn't sell off. We were up. We've been up pretty much every single day this week, today being the nicest of days. We were at a lower level in the morning, came up, and then kind of just stayed flat the rest of the day. We slowly lost steam. We might have been off 0.2%, some small amount in some of the indexes between the start and the finish. But today we had no sharp decline. There was no sharp decline and no sharp increase at all. It was a very calm, slight rally. It seems like we're kind of just grinding our way up. But can we keep this grind on forever? And I'm starting to get back to no. I think we're going to have another pullback that might start tomorrow, might go into Friday. We'll go over the weekend, and then maybe Monday we'll return to going up. I think we're in kind of a range-bound situation. I think we've rallied off the lows, and I really want this rally to be complete. I think we've gotten our, gains back and back to the long-term investors. People did a lot of buying at the bottom. Bill Ackman's up 15% on the year. There are people out there who were buying, who were smart, who saw the bottom and decided to get in on the low prices. Buy America 30% off, and if you had that opportunity, I hope you took it. But there's been some damage to America. We're at war. We're at war with the virus. So we definitely need to consider that fact, that we are at war with the virus, that a lot of jobs have been lost, that Neiman Marcus just declared bankruptcy. And there are businesses that are going to go away. There are a lot of small fringe businesses. There are good small businesses and there are bad small businesses. There are new businesses, new restaurants that aren't really good restaurants, that were barely just making it. Those ones are going to go away. And they employ people, even if they might have gone away in a year or so. This is kind of washing them all out in one go. So there's going to be a lot of people unemployed, and we don't know if those people are going to get a job, be able to get a job so quick. So there is this level of uncertainty, and there is this certainty about damage. So we're not going to rally to the all-time highs. Yet the NASDAQ just finished up positive for the year. Not at the all-time highs. We're at the all-time highs right before the coronavirus downturn in every index except the Russell 2000. If you want some insights on that, go to my February 16th video. But, we're up on the year in the NASDAQ, and the year is only 5 months old. So think what you want with that, but I think we're kind of approaching the top of the range. So I don't think we're going to double dip. I don't think we're going to test the lows. None of those phrases that, the hardcore bears are saying. And I really think these hardcore bears are just the people who missed out on the lows and want to get back there so they can buy. And that's, their emotions and stuff talking. But I think a pullback is warranted. I think a pullback is warranted. We could pull back and I'd be happy. We should see a range. There's no reason to go beyond this level. I don't think we should be up on the year. I think being close to up on the year is okay. I don't think being up on the year is okay. I think we should continue to be down on the year when coronavirus wasn't a thing on New Year's. Wasn't a thing. Nobody knew about it on New Year's. People knew about it mid-January, late January especially. Late January is probably when it started to become a thing that market analysts should have been watching. But early January, absolutely not. So for us to be at that level, when we've had this global pandemic, I think it's a little too optimistic. There is certain economic damage, and we'll see what happens with that. That said, Lyft came out, posted pretty good numbers, better than expected. Uber came out, better than expected on revenue, a lot more losses, but better than expected on revenues pretty good. Apparently, they're seeing better numbers in April. Apple, been seeing better numbers in April. Bank of America CEO, consumer spending returning in April. So with all of this pessimism, there are signs for optimism, but I just want you to be aware of this range that I foresee happening. And I want you to acknowledge that at some point, we're going to be at the top of that range. So I think we might be at the top of the range. It's not a call to sell. It's just a call to take your foot off the gas a little bit, because there might be an opportunity in a couple days to get that very same stock, maybe 5-10% tops off. So until tomorrow, peace.